this company, I've always thought of this company as your baby. You started it 35 years ago. You grew it into this phenomenal thing. And I was really surprised when I heard that you were going to go ahead and do an IPO, because I wondered what you're missing. Is it the quarterly calls with investors you're looking forward to? Why are you doing this?
Well, Jay gets to handle all that, so I can't speak to that. But I will say that we just thought it was the right move for our company at this time. 35 years in, got thousands of people now working for the company, and they all are stockholders now, which is a great thing. Something we've always wanted to do. That's hard to do in a sub-S corporation, private company situation. But you can do it in a public. We want to use our stock as currency and potentially acquire more fintech organizations and put them in the mold. So there's better access to the capital markets. And there's a lot of reasons. You probably know them all yourself, I'm sure. But we're excited about it. And if I could borrow a line from Jeff Bezos, we're in a get-rich-slow scheme here. 35 years in.
35 years.
Yeah. I can't take credit for that line because I heard him say that somewhere.
That's a good line, and it's definitely applicable here. And Jay, you're going to get the tough questions on this morning. You are the CEO. You're the one who's going to be running things. The pricing came in below what had been anticipated, $18 versus the $20 to $22 a share, and you're looking at fewer shares, 100 million versus the 150 that had been talked about earlier. That brings the valuation down from, at the high end, maybe $3.3 billion down to $1.8 billion. What happened? Why do you think the cooler reception than had initially been anticipated?
Well, I would say that we're pretty excited about where we're at here. And as you know, this is an art more than a science. And so as we talk to our bankers and so forth, we put our best foot forward. And probably the most important thing, as Dan discussed, we've got 35 years in the business. So we're more focused on the next 5-10 years than any given moment in time. And so the investor base for our opening was probably the most important thing. And so we focused on that versus selling as many shares as we possibly could. So I think we're in great shape and more excited than ever about the future. You think about the momentum we've got, record quarters, record profitability, record growth. So this is a great starting point. Like Dan just pointed out, we're close to 9% market share, up from just 5% a few short years ago. So a lot of positive things happening. And as he always reminds me, this is a marathon, not a sprint.
Now, you guys are now the largest mortgage lender in the United States, eclipsing Wells Fargo, who used to be leading the way, JP Morgan, other big names that we know. And that's incredibly impressive. I think some of the questions that have been raised is, look, it's a cyclical business, and it's been so hot right now. Your revenue for 2019 was like $5.1 billion. But is there a point where it starts to look like a less rosy business because interest rates are already so low? Probably everybody on the planet's trying to refinance right now. Is there a point when that turns, and what do you do then?
Well, great question. Dan and I were talking about this. There's nearly $11 trillion worth of mortgages out there that are in the money, meaning ready to refinance. I think the capacity for the market is about $2.5 trillion. We're making up a good portion of that and continuing to grow each and every day. But Becky, when we think about our business, we think about the long haul, and as we come up with strategies to grow, whether it's purchase or refinance, cash out, we don't think about the rates. We don't think, is it going to be a $3 trillion a year market, a $1.5 trillion. We kind of just target a normalized market, and then we set all of our drivers to grow profitably, and that's what you'll keep seeing us do. So 35 years in the business, Dan's always said, interest rate is not the factor. Client service, great technology, those are the ingredients that are going to move you forward, and that's what we'll keep doing, and we'll keep grabbing market share. Our goal, 25% market share over the course of the next 10 years.